All right, welcome to Trading Nation. I'm Brian Sullivan. We're joined today by Bill Stone, Global Chief Investment Strategist with PNC Asset Management. And Bill, welcome to Trading Nation. Despite a lot of concern, angst, agita, whatever you want to call it, about valuations in the market, you actually believe that the implied value of the S&P 500 is 30% more than we're currently at. Let's get to that point. How do you get that implied valuation number?
So really what I did is, it was funny, part of it came to me watching Warren Buffett on CNBC yesterday, really talking about the fact that interest rates matter for valuing stocks. So I just said, and we've done this exercise before, but I said it's worth revisiting that again. So really all I did is look at what the consensus earnings were for 2018, take a look at where corporate bonds are yielding right now, and then assume corporate bond yields move up about 1 percentage point. And then just trying to look at the historical difference between the two. That gets you to about a 30% upside, believe it or not, to stocks. Now, I don't necessarily think we'll get there because I think stocks are going to discount probably yields moving up even higher than 1 percentage point over time, not necessarily next year. But that being said, at least tells you that stocks are not wildly overvalued, certainly relative to interest rates anyway.
You don't think we're popping 30% in the next 12 months, do you? I mean,
I
as
really
somebody with a
don't,
401k, I hope we do, but I can't see it happening.
No, I don't think so. I mean, I think a lot of things would have to go right. And frankly, it would be a bit scary on a lot of cases because you get the earnings yield, in other words, the earnings divided by the price of the S&P 500, down so low that you really have to expect pretty low future returns. But was an exercise to say, you know, people that say there's really no upside left in this market, it can't go up anymore, I think, frankly, they just have to realize they're wrong on that. I'm not saying it will go up. I'm not saying it won't have a pullback. I just think you have to keep in mind that there is room relative to history.
What's the biggest risk then? If it's not valuation, obviously it's not because you think the market is undervalued wildly on some levels, what is the biggest risk?
Well, I mean, so part of it is the valuation in the sense that what you assumed, right? So I assumed interest rates on corporate bonds going up 1 percentage point. If it really went up a whole lot more than that, eventually that would pressure stock prices. The other side is earnings, right? I assumed consensus earnings. Consensus earnings are supposed to be up about 10% over 2017. I think that's probably reasonable, particularly if we get tax reform. But obviously that could fall apart, right? If the economy falls apart again. No sign of the global economy falling apart. In fact, we've gotten some signs this week that the U.S. economy is looking really pretty good.
Yeah, I mean, there's a number of factors that are out there. You think that's going to, you know, the economy's one thing. Do you think it's going to directly translate into better corporate earnings as well, Bill?
I think it will. You know, obviously we might get some noise from the hurricane this quarter, and we are looking at harder comparisons quarter over quarter here for the third quarter. But again, it looks like a pretty good chance that we'll see double-digit earnings here for 2017. And again, we got the chance of kind of a boost as we expect some sort of tax reform on the corporate side that should show up in 2018.
And tell us why Japan may be the world's best kept investing secret.
I just think no one is paying any attention that the Nikkei hit a new high today. And it just, I literally hear no one talking about it. And I think part of it is, of course, you go back to that story, their economy's not going gangbusters. I can't imagine it'll go gangbusters anytime soon. But that being said, it's not near going back into recession. And I think their corporate governance has gotten a lot better. I just think there are some good things going on in Japan that I think you really do have to keep an eye on.
Bill Stone, PNC, a really interesting viewpoint there from a number of levels, and we will watch Japan, I promise. Bill, thank you very much.
Thank you.
Have a nice day. Folks, thank you for tuning in to
too.
Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.